Did you know that in late 2025, the Nasdaq might enter one of the biggest bull runs in history? All signals from the US economy point to one thing: interest rate cuts are coming. Let me break it down in 1 minute. First, inflation. Back in 2022, prices for eggs, gas, and rent went crazy. The Fed raised interest rates aggressively, and the stock market dropped hard. But now, as of May 2025, inflation is down to 2.4%, almost at the Fed's 2% target. Core inflation, excluding food and energy, is down to 2.8%, from over 6% in 2022. That means inflation is under control, and rate cuts are becoming possible. So why hasn't the Fed cut yet? Because the job market is still strong. Unemployment is at 4.1%, historically low, but slightly up from 3.5% in 2022. This shows the job market is slowly cooling. Economic growth is also slowing. The US GDP growth rate is at 1.4%, lower than 6 months ago. It's a soft landing. Consumer confidence is rising fast. In June, it jumped 16% compared to the previous month. People are starting to feel better about spending. So here's the situation: inflation is falling. The job market is softening. Consumer confidence is rising. That's the perfect setup for a rate cut. Fed Chair Jerome Powell said it's not time yet, but if inflation keeps stabilizing, cuts could happen. Big banks like Goldman Sachs, Citi, and UBS expect rate cuts of 0.5 to 0.75% between September and December. In fact, futures markets recently gave a 70% chance of a rate cut in September. Why does that matter? Because when rates go down, tech stocks usually surge. Tech companies make most of their money in the future. When rates fall, the present value of future earnings goes up. That drives tech stock prices higher. So if the Fed cuts rates, the Nasdaq could soar. And current tech earnings are already strong. Nvidia's market cap is now $3.9 trillion, close to overtaking Apple. AI demand is driving massive profits for semiconductors, cloud services, and data centers. In May, the US also announced it would slash tariffs on China by 115%. That day, the Nasdaq jumped 4.3%. Markets took that as a clear signal rate cuts are not far off. Other countries like Canada, Europe, and Australia have already started cutting. The US is the last one holding out. Once the Fed moves, the final piece falls into place. That could spark a massive Nasdaq rally. My estimate? Between September and December. This same pattern played out in 2019. Trade tensions raised inflation, and the Fed waited. Then in July 2019, they cut rates, and the Nasdaq surged over 35% in 6 months. The same setup is repeating now. Tariffs were cut in May. Jobs and spending are slowing. Inflation is near target. If this continues, the Fed may cut rates by the end of the year. When that happens, tech stocks could explode again, pushing the Nasdaq to all-time highs. Don't focus on short-term drops. Look at the big picture. This is the kind of trend that creates real wealth. If you want to follow this kind of shift in the market, keep watching MoneyScope by subscribe and learn the economy in 1 minute a day.